Hello everybody, Houston here. I hope you guys are doing well, having a great day or a great night, and let's jump into the charts. Okay, so finally we found a proper chart, much better than the previous one I tried to make an analysis. And also this one here is the price is correct. Okay, so first things first, let's look for volume. And just another thing, remember, this is not a chart from TradingView, okay, because we don't have data there. So I don't have my tools and my setup here, okay. I have to do everything from the scratch. And so before starting, just a second, because I will clear the lines. A second. Okay, so much better now. Before anything, let's take a look on volume and on OBV. Okay, so here, just a second please. Okay, let's go. Okay, so let's draw our lines. Okay, so we had the bull trigger here. Second. Okay, so let me use the proper line. Black, please. Okay, so what I'm going to do here first, I will address the line on the chart, and then the same one from for volume, okay, and then we will catch up with all the divergence to find the honey spot. So this guy here, this one here, and then this one here was a key for a better understanding, because this lower high here, so remember, just a second, okay, here it is. So this guy here was a lower high compared to the previous one, okay, and here what we had so for this one we didn't had any divergence at all, okay, no problem, but right here we had the strong divergence. As you guys can see, the buyer's volume went all the way up while the price made a lower high, followed by, now let's take a closer look on this guy here. Let me clean this. Okay, so right after we made we lost the floor here, and we made it this low, which was a higher low, okay, as you guys can see. Oh, this is bullish, and also we can see the same move here. Can you guys see how we make they they work it all their way exactly like in a bull scenario, with higher high, higher low, higher high, higher low, higher high, and higher low. So all this behavior here was like astonishing comparing with the price behavior. So the divergence was very clear for people who are looking for this asset for more time or are engaging on the daily basis. They found this out as well. Okay, just a second. Okay, let's go. Sorry. Okay, so again, let's draw again here. So our previous low, Let me use a straight line. Black, please. Okay. And now let's make the same thing from for the bottom. Okay, so here remember we are not trying to make any pattern. No, it's just to highlight the volume divergence. Okay, that's the only thing why we are drawing the lines here. And also, like just explained for you, the way that we behave, this is a bull market behave. I'm not saying XDC is in a bull market already. Okay, remember, for such thing to happen, we have to clear it out to the previous high. Okay, that's the first thing before calling for bull market rally here. But we are going to jump into this. We had another bullish divergence here as well, which is here. Oh, no, it's actually, so we had this one and this one here. Okay, no, it's actually nothing special at all. But as you guys can see, this level here is somewhat close to this guy. And if we take a look on the divergence here, it's big, right? It's much more aggressive than the price behavior itself. Okay, so a couple of things to have in mind. Let me clean this before we continue. Amazing to see such bull move here. Okay, so for volume, we also had raging volume 2 times. First one here, and the second one here. And what's also interesting as well, as you guys can see, this first candle, the second, and this last one had almost like a very small rejection. Okay, so this is a bullish sign. If I'm not wrong, this pattern is also called the 3 white knights, okay, which is bullish. So always have in mind all the clues, everything that we have in the charts leads to something else. Okay, so that's the reason we try to address everything. Okay, so here another thing that I want to show you. Okay, so you guys know I never traded this coin. I never invested on this coin, but I came to know about this later. Okay, so I'm not looking for FOMO or I'm not going to buy high. Okay, so perspective here, in my opinion, the proper way to look at this chart, take volume down, is something like this. Okay, just a second, please. Okay, let's go. So let's tag our high, our previous high. So which level is this? Is almost 2. Let me check the numbers on the right. Okay, this is the proper level. Okay, so what we are looking for here, it's so let me draw the lines so you can see as I see and understand better. In a few seconds you will understand what I'm trying to show you. Just another 2 more levels. Hold your heads. And just one more. Okay, I think that's enough for now. So what we will be looking here for is this. This was our previous trigger. Okay, as you guys can see, this level here, 1 cent, is very, very significant. Okay, no news, we end up rejected multiple times. If we take a look on the 4 hours and the daily, we will see multiple rejections on this level. Okay, and it's also interesting to see that again, I believe I mentioned this in the Bitcoin chart, if I'm not wrong. You can take a look on my video for Bitcoin analysis, and you will see the same behavior here. What I showed there is this. Some people will use this level here to take profits and place their shorts or trying to sell. Okay, it's like sell high and buy low before continuation, something like this. Okay, but what we can end up here is this. For example, this small range here can give us confluence for any move like this before the bull attempt, or even a bearish one that will broke bearish, pay off the bears before continuation. Okay, so that's not a wise strategy. Okay, to sell something you know it's going higher in attempt to buy one last time, so it's like one last chance to accumulate. Okay, so it's not a wise move. This is not financial advice. This is the way I see how things happen. And okay, let's go. Let me take out this one here. So let's get back to the bigger picture. Okay, let me check this. Okay, so this range here, as you guys can see, it's a little bigger than the other ones. Okay, and this is because we are using the log scale, because without the log scale we can't chart it properly. So what I'm going to show you here is our key next level. I believe this Fibonacci is not properly set up. Oh, it is. Okay, great. Just a second. Okay, I believe it's correct. Just a second. Yes, it is. Hold your heads. Okay, so okay, so this is another very interesting thing, so you guys can understand a little more about why I use always Fibonacci and Fibonacci only. This, oops, so this is the 50% of one level to the other. Okay, and actually not this one here, which is also close. Oh, this 2 is awful. Just a second. Okay, so we top it out on the 50 of the 50, which is, remember, the highway from one level to the other. Okay, it's like a cross, like a bridge. So we already have the trigger. Okay, so this is of course is going to be the next key level, but again it's already breached. Okay, there won't be a somewhat a high resistance here, because as you guys can see, just a second, so let's say people will jump here in this level to sell and try to do the thing that I just explained to you. This level here will act as support, strong support, but the reason is because it's a key level, and once this level will be reclaimed, we will see the late bulls jumping in. Okay, so it's like some people selling here and the bulls waiting all this range to buy one last time before continuation. Okay, so this is a possible scenario, very likely to see, because sometimes we expect for a even lower move that may not come, and some people lose the train. Okay, so have this in mind. Let's take out the 50. And what we are looking here for next, these 1, 2, 3, 4, these 4 guys here, if I'm not wrong, they are making 100% more move. Okay, this is not measured in price. Okay, this is measured for market expansion. Okay, so another thing to have in mind, because sometimes when we say whoa, it's going up by 100%, so almost everyone will always jump into price to check price if it's 100% on price. But we are talking about levels, of course, of price as well. But before price, we talk about levels. Okay, so that's the proper way to identify the direction and how it's happening, and etc. So yes, we are likely to see a move to 12 cents. Yes, 12 cents. And even maybe 21, okay, in the near future, presuming nothing bad is going to happen with this project, okay, because it's something that we all have must have in mind always, okay, because we know how, for example, ICOs are. When it comes, it's like something beautiful, amazing, and when they deliver, it's like you know, a word horse. So watch out, stay safe, and let's keep going. I will take out the lines because I like the clean charts. Okay, so here we had the first bullish attempt for a breakout. And we broke bearish here. So this was a bullish continuation pattern, okay? And perhaps they punished the buyers, because as we saw in volume, we had much more buyers against sellers. So the market will always punish the side with more people. Okay. Let me see what else we have. Okay, so here we had another 2 strong levels that are very significant, and are also thrown for transition. Yes, here it is. So as you guys can see, this range here, we almost had like no stopping power from both sides. Okay, so we had a very teeny buyer's attempt here to defend this level, and also here we had the same kind of behavior, and the reason is because it's a level of it's a level of transition, like a bridge. Okay, this is the reason for from some ranges we have a strong impulse without rejection, and for the small range sometimes we have some traction. Okay, have this in mind as well. Let's take a closer look. Let me clean here. Okay, so let's take a look on Fibonacci to see how it went up. Okay, so why I am measuring a move that already broke. The thing is, in order to understand what is happening, we always have to go back and check how it happened. Okay, so just by drawing the Fibonacci, a thing that I can see that was not clear before the lines is this. So as you guys can see, oh, there. Okay, so we have an issue here. Okay, I don't know if this setup is it's sorry, it's following the log chart. Okay, but I believe it is, because on the for these trading view charts inside the other exchange, for example, we don't have access for some tools. Okay, so have this in mind. So as you guys can see here, we had the trigger for the golden, and then we crossed all the way above to the golden, to the top. Okay, and then right after we developed a bullish continuation pattern. But the problem here was this pattern broke bullish in a premature way. Okay, so it was some FOMO, and this last candle here, the green one inside of this pattern, was the key for the continuation, because we had a full shadow over the previous two red candles. Okay, so we engulf the previous candles, make shadow 100% plus, and then you have the bull break. And another thing here that I always talk about is this. So again, this was one pattern that was trying to break bullish, right? And broke bearish. But the thing is, can you guys see here? This, so let just a second. Okay, so for this range, we were looking for not we look for the first things first, and later for the bull break, our target. Okay, so the first thing we were looking for was the average price, which is 50%. 50% is not a Fibonacci sequence. Okay, so this is well known. It's we have two things here. We have down theory for the 50, and then we have the bridge from one level to the other, and the bridge is going to tell us which direction the price will go. Okay, because for example, if we didn't make it to the 50, let's say we stopped here and then go back and then back, every time we move far away from the average price, it's bearish. Okay, so in this scenario here, we had the opposite. We crossed, we printed a bullish pattern, and then we closed above the 50%. So this was the key, the trigger for the bull move. Okay, okay, so again, another thing about why I'm using the Fibonacci here, as you guys can see, we had attempts from the sellers on the 780-60, okay, because they were following the lower high like a picture. Okay, so this is one of the issues that happens when we draw lines expecting our plan to play out. It's like creating an illusion or waiting for something that will never happen. Just a second, please. Okay, let's go. Sorry. So this is one of the reasons I don't use such lines. Okay, I also call these anxiety lines, because they are only give problems. Okay, and so right here, another clue before we looking above. This guy here is the 80%, and we had a bullish attack, and then right after we crossed above the 80, which was the late trigger for the late bulls, like the last train before departure. Okay. And now let's take a closer look for what we have here. Let's take a look on the 12 hours. Okay. So here in the middle we had a bear candle. This red candle here with a long tail, it's a well-known bear trap, okay? Where the buyers are not able to make a new high, to push all the way back and end up with this kind of hammer here, okay? And so this is a trigger for the bears, or at least for the early bears, okay? And they end up in the wrong side of the trade. And now we have another bearish candle. It's a bearish spinning top, but this is a 12 hours chart, and is not over, and we will look for the next ones. Let's take a closer look on the 4 hours. Okay, so here oh, here again, just a second. Let me take a better look on this guy. Okay, so this one here was the bullish pattern that I mentioned before. Then we had another one here, a micro one. And after this move here, we are going up, not in the worst, not in the best way, okay? Because we know that parabolic moves without proper payoff to the bears end up with a strong sell, okay? Because sooner or later the bulls will have to pay off the bears, otherwise they will jump in force, okay? That's the same candle, the bearish spinning top, but we still have full body candles, which is it's nice. Let's take a look on 1 hour. Okay, so here this was a small tightening pattern that led to this continuation, but I am afraid let me okay, so yes, we still have ranging volume, which is amazing, okay? It is nice. Why? Because all this move up is being sustained by increasing volume, which is aligns perfectly with what Down said, okay? Because we can't have or can keep printing new highs and have a price discovery, not in this case, but price discovery and without volume, okay? That's a bear trigger. So it's looking great, the volume following here. Okay, so it's not bad, because I really don't like parabolic moves, okay? For example, if we have a parabolic move like this, and then we let the bears do their correction before going up, it's amazing, it's fantastic. But every time we end up in scenarios like this, it's bad in my opinion, okay? Just a second, please. Okay, let's go. And let's take a closer look on the 30 minutes. Okay, so here, let me see. Let's use the lines here. So for this one, I will make body to body. So this we also can take this structure here with this perspective as well that I'm going to show you. Okay, so this is valid to call this a ascending triangle. Yes, it is valid, but it's also valid to call it as a rising wedge. Not too aggressive, okay, but it's a rising wedge, and it's like we are starting to bend, you know, and moves starts to become even more aggressive. This is a behavior of parabolic moves. Okay, so this would be like a first step to watch, and also draw your lines to have a better understanding of what is happening. Okay, and so for this one here, it's not clear, but it's like another tightening pattern. Let's take a closer look. Okay, so here, just a second. Okay, so here we are going tight again, but the problem is that the ranges are too small, which give us the following. When I say in my charts, in my analysis, or even in my posts on Twitter, when we have like a pattern on the 15 minutes, we are talking about 15 minutes outcome. Okay, so we are not expecting. Oh, sorry, excuse me. Let me clean this just a second. So the targets for the bull breaks here, as you guys can see, are very small, and this starts to create bad patterns. Okay, so it's like a lack of momentum for more continuation. Okay, so yes, that's it. As you guys can see here, we still have buyer's volume, which is great, but it's starting to like time to rest a little before keep going. Okay, so this is the way that I look at it, and I believe we covered everything here for Xdce, and I hope you guys enjoy this video. I hope this info can help you have a better understanding. And let me take a quick look on the chat. George, good morning. I believe that all this activity is the utility from R3 and Circle. I don't believe it's retail because it's been a while. It's going up consistently. Yes, but the thing is, the volume for the market for the Xdce is too low. Okay, so any small amount of money can make print moves like this. Okay, so if this was utility, we would see in the charts, like we can see on XRP, for example. So my humble opinion, I don't believe it is utility yet, okay, due to the low volume. Logger always leads to something good unless it's suppressed XRP. Hello, my friend. Matsumura, very nice content. Thank you, thank you. Well, great. Since last September, nice. So you are saying we will pull back around? No, I'm not saying we will pull back or go up. I'm just saying it is possible that we have triggers. Okay. Hey Sean, thank you. You are welcome. So guys, I believe this is it for now. I will try to cover other charts today as well. Okay. So don't forget, hit the like button, subscribe, and share with your friends. Okay. I will see you guys soon. Thank you.